Hey everybody, George Chamberlin here, watching your dollars on this Friday, the 7th of October. Hope you all have a good weekend in store. It's been a good week on Wall Street, and we've had a lot of economic news out that's been encouraging about the job market. And today on Friday, we got a very important report that showed a pretty significant increase in private sector payrolls in particular. I thought what we would talk about, though, is what's been going on with oil prices lately. We haven't gotten into that too much. And this is something that affects consumers in a number of different ways. Oil is a very important commodity. Obviously, it's the component that leads to the gasoline that we use in our cars. Which means that it's used in the shipping of products, so it has an impact on the price of food. It has an impact on so many parts of our lives, and so it's really kind of important to talk about where we are now, where we've been, and where we're going. Here's a chart. This is not a chart of oil per se, but it's a chart for a mutual fund, an exchange-traded mutual fund that trades under the symbol of OIL, and it pretty much tracks what goes on with oil prices. This is the early part of 2010. And this is when we had a pretty big drop in oil prices. Then we kind of gradually meandered in here and moved up. We got into a point in here, this would have been May, June, when we got a pretty big spike up in oil prices, and so the price of this mutual fund followed it right up in there. But then all of a sudden, as we started to get nervous about the economy once again, boy, look at what's happened. Prices have come down, and little spikes, a few spikes along the way. We've gotten way down over into here. What we see today, earlier this week, by the way, oil got down to around $75 a barrel. We're around $82 trading this morning. So even at 82, and again, this reflects the price of this fund, but I'm using it as a surrogate for the price of oil. Even with that, you can see that oil prices are still well below where they were. And there's a lot of arguments. You can go to a website called marketwatch.com today and read a report about what's next for oil, $50 a barrel or $100 a barrel. There's arguments on both sides. What I will tell you, and the way I tie this together with the jobs report today, is that if this jobs report is the beginning of a recovery that shows that employers are getting going in here and the economy is going to start to expand, economic expansion means greater demand for oil, greater demand for gasoline, so we could see prices going up. So it's kind of a dual-edged sword. You'd like to see prices stay low, but the reason oil prices are staying low is because the economy is weak and we're not creating jobs. The other side of the sword is that if oil prices start going up, it will be because the economy is getting better and people are going back to work. So it's kind of 6 of one, half dozen of another, but it is a very important commodity to keep an eye on. Watching your dollars, I'm George Chamberlin. Have a good weekend.